Yeah, so new construction has been our focus for quite a while. The Wall Street Journal actually recognized us back in 2013 as being a pioneer of building new construction rental properties because nobody was doing it back then. Uh,
Yeah.
since well, we actually started in 2011. The Wall Street Journal picked it up in 2013, but since 2011, we've built over 500 new construction homes, and we continue to go bigger and bigger because it's such a wonderful asset for our clients to own. Like, being an experienced investor, Keith, the biggest pain points as an owner of rental properties are maintenance and vacancy costs. And at the end of the day, if you have a resident who has the opportunity to rent a brand new home, the chances of them staying there a lot longer, paying a little bit higher rent and getting a premium there and taking care of your home are much stronger. And at the end of the day, that's why it works so well. So this year alone, we're going to build over 400 new construction homes. We'll be one of the largest builders here in Jacksonville. And our clients are just loving that new construction inventory.
Yeah, they're very attractive to tenants. And when you get a tenant, I know oftentimes you're signing them to 2 or 3 year leases. And oftentimes a tenant in a new construction home is willing to sign up for a long-term lease because they don't want to leave that home. They've never, or rather, no one has ever lived in that home before them.
Yeah, I go back to when I was renting my house, and it never even factored, meaning I was renting a house. It never even factored into my mind that I could move in and rent a house that was brand new. I mean, that just wasn't possible. So when you have that allure for a resident, they are certainly going to want to be there for a long time. And what a lot of investors forget in this entire equation is, unless we have a really happy resident, we're not going to have a really happy owner. And if we don't have really happy owners, then JWB, can't, we're not going to be nearly as happy as well. So we have to take care of those residents. We have to give them a really wonderful quality product. And when we do that, everybody else falls in line and is happy as well.
In my opinion, the real deal with buying new construction in a place like Jacksonville is you as an investor are going to have to take less cash flow up front. Rents generally go up over time, and with a new construction property, you're going to reduce your vacancy and turnover cost because you're not going to have things that break or wear out, and your tenant is going to want to live there for a long time. So in my opinion, that's really the trade-off and that dynamic that you need to think about that. That's a mindset you should have as an investor.
Absolutely. And that's a really important point to make. If there is an investor out there who's looking for the absolute max cash flow, Jacksonville is probably not the market for you, right? There may be a place in their portfolio for a max cash flow market, maybe like a Cleveland, right? But then there's also might be a place for a balanced approach. And that's the clients that come to us. They want that balanced approach. It meets the threshold of positive cash flow, and then they want to look at potential for growth. And that's why it'll work for some investors, but not for all.
And you know what? For a new construction property, or frankly, even a rehab turnkey, I don't like to hold on to a place for more than 8 or 10 years because that at that 8 or 10 year mark, that's where you might have some systems beginning to wear out, where you really have to make substantial replacement. That's the point at which I want to dump it, sell it, and do a 1031 tax deferred exchange. And typically, like we mentioned earlier, if you have an 8 to 10 year hold time, it's quite rare that you would ever sell the property for less than what you bought it for just 8 or 10 years earlier. So that's my strategy. When equity accumulates, I want to move it along with that 1031 exchange and move it along just before things start to wear out. And you know what? With the single family home strategy, you're going to be able to sell it to a homeowner that doesn't need to make the numbers work because they're going to be an owner occupant. That's the formula right there.
You say, well, I'm a disciple of your teaching as well, because your return on equity is what, Keith?
It's always zero.
There you go, brother.